Welcome to the Clark Pacific Quarterly Investment Update. The prevailing investment conditions for the last quarter have been very good. The Australian economy is growing at 2.5% per annum. Inflation is at 1.7%, the cash rate is still very low at 2.25%, and unemployment has crept up to 6.3%. The Australian dollar has stabilised around the 77 to 78 US cents range, and the average residential dwelling has appreciated substantially to 572,000, with the Sydney market being very strong. The Clark Pacific model portfolios have performed exceptionally well over the last quarter and year. Returns for the quarter ending March were between 2.99% for the most conservative portfolio and 8.27% for the most growth-orientated portfolio, whilst returns for the 12-month period ranged between 9.17% to 21.42% respectively. This has been achieved even though many of our managers have been defensive and built cash positions when appropriate. Please note that these returns are well above our long-term average expected returns. Our investment committee met last week. The role of the investment committee is to review performance, make tactical asset allocation recommendations, and to hire and fire managers as appropriate. Following this meeting, we have the following investment view. We believe Australian equities look fully valued and are generally expensive with a constrained growth outlook. Fixed income and bonds look to represent higher risk than we would like. Growth in US companies relying on a lower US dollar will be constrained, and opportunities exist in Europe to buy good quality companies at relatively low values. Given this, we've decided to make some changes to our model portfolios to position them for capital preservation and growth. These changes include reducing our exposure to the Australian share market by selling K2, decreasing our position in US companies by reducing our holding in Magellan, increasing our exposure to Europe by buying more PM Capital, and finally, increasing our holding in the MLC Absolute Return Fund in our most conservative portfolio. These changes can be summarised as taking some gains off the table and fine-tuning the portfolios for the future. These recommendations will be communicated with you over the coming weeks. As always, if you have any questions, please do not hesitate to contact me or my team. Thanks for watching and have a great day. Please share this presentation with a friend or colleague that may benefit from our advice.